When it comes to investing, a lot of people need to just jump right in, really investing a very small amount to get used to whatever you're going to be using, whether it is Robinhood, whether it is M1. We have some links down below, is getting in and actually doing the investing. This is where a lot of people kind of have the shortfall where they never actually start. Now, for me personally, I only invest in ETFs, and that is my recommendation. ETFs, of course, are exchange traded funds, and this allows an investor to buy a bunch of stocks or kind of a pool of stocks all together at one time. For instance, if you're investing in the S&P 500 ETF, you're investing in the 500 largest companies within the United States. So how does an ETF differ from a mutual fund? So when you look at an ETF is kind of a whole pool of stocks and bonds where you can invest an entire segment at once. Mutual funds, on the other hand, put all their money and pool it together to invest it with a financial advisor. Now, with the mutual funds, it usually does come with a much higher price tag because you have a person who is actually investing or is actually spending time and effort into investing your money into what he feels or she feels that it is going to be most indicative and what is going to have you the most gains. On the flip side, with those ETFs, they are exchange traded funds and they are for the most part, not managed for what is in there. So of course, the basic of ETFs, there are a few different things. There are passive and active ETFs. So passive ETFs actually, they go in here, they trade on an index. So they going just like we said with the S&P 500. Active ETFs actually hire a portfolio manager similar to mutual funds that they're going to do this. Now, of course, one thing with ETFs, which we all love more than anything, is the expense ratios that we see. Now, when it comes to ETFs, for instance, some of the Vanguard are 0.03%, meaning that every $10,000 that you have invested, you're paying $3, which is really nothing when it comes to the investing world. When you look at the mutual fund side, you might pay 1%, 1 full percent, or 1.5%, depending on who you're getting to manage that fund. And then, of course, they do pay dividends. Now, if you're like me, right now, actually, yesterday was the ex-dividend date for a bunch of ETFs. I reinvest the dividends. You have a choice to either take the dividends, which you can not reinvest them, but this is where you get the compounding aspect of ETFs or stocks, anything, is when you let that money roll over and roll back into itself, you're going to see an absorbent amount of growth. So not only will you see growth from the stocks, from the bonds, from everything that is held within the ETF, but on top of it, if it is paying dividends, you can actually put them back in the ETF. Now, of course, with the ETF and a standard brokerage account, if it is not an IRA, you could have taxable income based on the dividends you're getting when you're getting those dividends on capital gains tax. That, of course, is very unique to you individually. So make sure you know exactly what you're going. So if you're doing an IRA, the IRA is tax deferred or it is tax-free growth, depending on the type of IRA that you do have. So how much money do you need to invest in an ETF? A lot of places do sell fractional shares, including Robinhood, including M1 Finance. You can go in there with as little, I believe $25 will get you invested in the market. That's why I say just get started. When you're looking to put just 25 bucks in there, put your money in and really see what you can do, see where you can trade it. Both of those platforms don't have the fees to exchange or buys and sells. So you can go in there, you can play around with the ETFs and see exactly where you want to. And in this video, we're going to be talking about 10 of the best ETFs to really invest in. Now, of course, with ETFs, there are some pros and cons. ETFs are an exposure to a various amount of stocks, bonds, other assets with a very low expense, which of course is huge. ETFs take the guesswork out of stock investing. This is the reason why I do not individually stock invest. When I'm putting it into that S&P 500, I'm investing in 500 companies. I'm not the one that is picking one company, one single company at a time to really know exactly how they're going to perform, breaking down all of their financials and everything that a company offers. Now, of course, ETFs are very liquid, being able to buy and sell. A lot of times this is easier than mutual funds. And of course, it can be extremely complicated when it comes to investing. When you look at ETFs, it makes it a lot easier. Now, of course, there are some drawbacks. Everybody is not just going in all on ETFs. Since ETFs own a diverse amount of stocks, they don't quite have the potential of an individual stock. So if you think of an ETF that holds, let's say, NVIDIA, you might not see quite the 400% explosive growth that this company has seen because you're only holding a small portion of the company within that ETF. If you would have invested in NVIDIA itself, you would have seen that explosive growth. With the ETF, you're seeing a little bit of growth, but not quite at the same level. And of course, ETFs are also low cost, but they are not completely free. So how do we start investing? Getting a brokerage account, opening it again through Robinhood or M1. That is two actual places that I do have brokerage accounts. Looking up ETFs. Now let's go through the 10 best ETFs for beginners that we have. And number one being the Vanguard S&P 500. Now this is the ticker symbol, the VOO. This is of course the 500 largest US based companies, which it encompasses all of the sectors of the market, which is the reason why a lot of people do really go into this. Number two, we look at the Charles Schwab or the Schwab US Mid Cap ETF, SCHM. This, instead of focusing on those large companies that we see with the Vanguard S&P 500, this focuses on the mid cap companies. Then we look at the Vanguard Russell 2000. So again, this is getting into the smaller companies. So you have an ETF that is built around large companies, mid companies, and then small companies. Now coming in at number four, the Schwab Emerging Markets Equity, SCHE, which companies from countries with developing economics. So this, of course, is when you start looking in more of the international side. So this is getting outside of the United States and looking at emerging countries, which of course could have a very big growth rate because they are developing. Now, of course, then we start getting into some of the dividends, some of the REITs. Looking at number six is the VYM, which I know a lot of people on this channel do invest in. This is the Vanguard High Dividend ETF. Stocks that pay above average dividends are kind of pooled together, put into this ETF, and that's exactly what they sell it. Now, of course, they have Schwab US REITs, SCHH. This is Real Estate Investment Trust. So this is when you're investing in real estate. So this is not in the actual individual companies, the large companies, the mid cap, the small caps. This is when you're getting into real estate itself, which if you're interested in it, a very small percentage of the portfolio might be good for you. But again, I always really stress doing your own research before you start investing and making sure you know exactly what you're getting into. Then, of course, we look at the bonds. So when you look at the SCHZ, which is the Charles Schwab Aggregate Bond ETF, these are bonds from all different varieties, all different maturity lengths, all pulled together to make it simple. You're not going out there, you're not picking and buying independent bonds. You are buying an entire bucket of bonds that you're invested in, which of course can mitigate a lot of the risk because of the bonds. And then of course, Vanguard has their own, the Vanguard Total World Bond Fund. That's right, this includes international bonds as well as US bonds, various lengths, various maturities. So again, this is kind of extending your exposure and extending your reach now to all of those international markets that are selling bonds. And the final one that I like is the Investco QQQM. Now, if you've heard of the Investco QQQ, let me know in the comments. The M version is just a little bit of a cheaper expense ratio, but overall, this one I do see probably more than any others other than probably Vanguard, with commercials, with entertainment, with a lot of different things that are pushing people to invest in this. Now, this one tracks the NASDAQ 100 index, which is very heavy on tech and growth stocks, which is huge because if you look at the last 10 years of the performance in the tech industry or even growth stocks at all, especially like the Vanguard Growth Fund, it has done exceptionally well. So a very good list of 10 basic ETFs for beginners to go ahead and invest in. Let me know which one really sticks out and which one you're going to invest in, and I'll catch you in the next video.